future of the Iraqi dinar, a potential game-changer for global finance. The Iraqi dinar has been a topic of intense discussion among economists, investors, and financial analysts. With Iraq making significant economic reforms and global financial landscapes shifting, many are wondering what the future holds for Iraq's currency. Could Iraq implement a radical strategy that redefines its position in the global economy? Could a potential revaluation of the Iraqi dinar change the financial game? In this article, we will explore Iraq's economic future, the possibility of a high initial exchange rate for the dinar, and how it could influence global financial markets. We'll also examine historical comparisons, investor implications, and Iraq's long-term financial stability. Iraq's economic reforms and the path forward. Iraq has faced decades of economic challenges, from wars and sanctions to internal instability and corruption. However, in recent years, the country has been taking significant steps to stabilize and grow its economy. Iraq's wealth primarily comes from oil exports, which contribute to over 90% of its revenue. However, diversification efforts are underway to reduce dependence on oil and promote industrial and technological sectors. To strengthen its financial standing, Iraq has been working closely with international financial institutions, including the International Monetary Fund, IMF, and the World Bank. Key reforms include modernizing the banking system, improving transparency, and increasing foreign investment. These steps are essential to Iraq's long-term goal of establishing a stable and globally respected currency. A radical but strategic currency plan. Setting a high initial exchange rate. One bold idea that has been gaining attention is the possibility of Iraq setting a high initial exchange rate for its currency. At first glance, this might seem like a risky strategy. However, upon closer examination, it could serve as a smart long-term approach to positioning Iraq as a strong economic player. How would a high initial exchange rate work? If Iraq were to introduce the dinar at a significantly higher exchange rate than expected, it would signal strength and confidence to global markets. This approach would establish the dinar as an independent and sovereign currency, attract foreign investment by demonstrating economic stability, provide the government with a stronger financial position to manage debt. However, the key to this strategy is allowing the market to adjust over time. Instead of an abrupt devaluation or appreciation, the currency would gradually settle into its true market value. This gradual adjustment could help stabilize Iraq's economy while reducing financial shocks. Benefits of a high exchange rate strategy. If Iraq adopts this approach, it could offer several key benefits to both the country and investors. 1. Stronger financial position. A higher exchange rate would give Iraq greater leverage in managing national debt. Since the government holds reserves in foreign currencies, a stronger dinar would make debt repayments more manageable. 2. Lower import costs and economic growth. Iraq heavily relies on imported goods, including construction materials, food, and technology. A stronger currency would make these imports more affordable, reducing inflation and supporting infrastructure projects. 3. Attraction for foreign investment. A more valuable currency could encourage foreign investors to enter Iraq's market. Confidence in a stable dinar would lead to increased investments in real estate, manufacturing, and financial services. 4. Market stability and gradual adjustment. Rather than experiencing sudden financial instability, this approach would allow Iraq to manage its economy more predictably. Investors would have time to react to currency adjustments, reducing risks associated with market fluctuations. Comparing Iraq to other currency strategies. The Vietnam model. Currency manipulation for economic growth. One country that has successfully managed its currency for economic gain is Vietnam. The Vietnamese dong has long been undervalued, allowing the country to maintain a competitive edge in exports. The U.S. has accused Vietnam of currency manipulation, but the strategy has undeniably fueled Vietnam's industrial growth. Could Iraq adopt a similar approach? While Iraq's economy is structured differently from Vietnam's, the concept of managing currency valuation to boost trade and investment is worth considering. However, Iraq must balance its financial policies to avoid being labeled a currency manipulator, which could lead to trade restrictions. The Kuwaiti dinar, a model for high currency valuation. Kuwait's currency, the Kuwaiti dinar, KWD, is the most valuable currency in the world. Kuwait's strong economy, vast oil reserves, and stable political environment have contributed to maintaining a high exchange rate. If Iraq follows a similar path by strengthening its financial institutions and stabilizing its economy, the Iraqi dinar could become one of the strongest regional currencies. Could Iraq join a currency basket? Another long-term possibility for Iraq is joining a currency basket. A currency basket consists of multiple global currencies used to stabilize a country's exchange rate. For example, the Special Drawing Rights, SDR, used by the IMF, is a currency basket that includes the US dollar, euro, Chinese yuan, British pound, and Japanese yen. If Iraq were to peg its currency to a basket of stable currencies, it could provide more stability in global trade, reduce the impact of currency fluctuations, increase investor confidence in the dinar. Joining a currency basket could be a crucial step for Iraq in ensuring long-term financial stability while remaining competitive in global markets. The role of gold and the future of global currencies. One major trend emerging in global finance is the increasing role of gold. Several countries, including China and Russia, have been accumulating gold reserves as a hedge against currency volatility. Former U.S. President Donald Trump even suggested that the U.S. should return to a gold-backed currency system. Iraq has also been accumulating gold reserves, which signals that the country is preparing for a future where gold plays a more significant role in financial stability. A strong gold reserve could further strengthen the dinar and provide additional confidence to investors. If Iraq eventually moves toward a gold-backed currency system or integrates gold into its financial policies, it could enhance the dinar's credibility on the global stage. Investor considerations. Risks and opportunities for investors. Iraq's potential currency reforms present both risks and opportunities. 1. Short-term market volatility. If Iraq implements a major currency revaluation, there could be significant market fluctuations. Investors should be prepared for short-term instability before the market stabilizes. 2. Tax and regulatory considerations. As Iraq's economy grows, the government may introduce new taxes or regulations affecting currency investors. Financial advisors recommend staying informed about potential policy changes that could impact investment returns. 3. Long-term growth potential. Despite the risks, Iraq presents long-term investment opportunities. As the country stabilizes and attracts more foreign investment, its economy could experience substantial growth over the next decade. Political developments and international influence. One of the key factors influencing Iraq's economic decisions is political stability. Recently, there has been significant pressure from both internal and external forces to finalize the country's budget for 2025. U.S. involvement in Iraq's economic policies. The United States has shown renewed interest in Iraq's financial situation. This involvement suggests that Iraq's economic reforms could play a role in regional stability and international financial strategies. Whether this means direct financial aid, policy influence, or trade agreements remains to be seen. Regional economic alliances. Iraq is also strengthening its ties with Gulf countries, including Saudi Arabia and the UAE. Regional economic partnerships could help Iraq integrate more smoothly into the global financial system and enhance its economic prospects. The future of the Iraqi dinar. What to expect? While no one can predict the exact trajectory of Iraq's currency, several key trends suggest that the dinar's future is promising. 1. Iraq's commitment to economic reforms. The government is actively working to modernize financial institutions and attract foreign investment. 2. Potential currency adjustments. Whether Iraq adopts a high exchange rate strategy or allows gradual adjustments, its currency policies will have significant global implications. 3. Global financial shifts. The increasing role of gold, shifting economic power dynamics, and international regulations will influence Iraq's financial decisions. Conclusion. A transformational period for Iraq. Iraq's economic transformation is unfolding in real time. The country is at a critical juncture where financial reforms, global economic trends, and political dynamics will shape the future of the dinar. For investors, Iraq presents an opportunity with both risks and rewards. Those closely monitoring the situation could benefit from Iraq's evolving financial landscape. As Iraq moves toward financial stability, the Iraqi dinar has the potential to become a significant player in global markets. Whether through a revaluation, a managed currency approach, or integration into a currency basket, Iraq's financial future is one to watch closely. What do you think? Will Iraq's bold currency strategy pay off in the long run? Let us know your thoughts.